All right, everyone, welcome to December 7th, 2022. It's a beautiful day because it seems like there are signals that are pointing towards us potentially turning around in some capacity, okay? When we're looking at just the broader markets themselves, right now the entire market is voice controlled as far as we can tell, right? And that's happening because the Federal Reserve, when they decide that they're going to print money and they're going to pump it into the system, that's when the market should return in some capacity. Wow, I look like I'm just completely black. This is nice. I always wanted to be black. That's a joke. A simple representation of the Federal Reserve printing money or not printing money is the 10-year yield or the 2-year yield. Okay. When you're thinking about them printing money, the 2-year yield becomes the most important because the higher the yield, in simple terms, the higher the interest for them to lend money out, the less likely it is that companies borrow money, right? Crypto pumped in this region, 2020 to here, where the yields were nearly 0%. So it was free to borrow money. So at that point, companies were borrowing money and dumping it into the markets like nobody's business. Plus the governments were just dumping money onto people and everybody, which flooded into assets and then pumped up assets. Now, from around the time where crypto started dumping until now, we've seen the interest rate go up. That tells us, okay, companies are going to have a much harder time getting debt because now it's 4% interest to borrow money, and the governments haven't been printing money and dumping it into the markets, which all means that the markets dump, right? So this has an inverse relationship. Now, what we want to see, and this is on the weekly because we like to really zoom out and look at things, but what we want to see is we want to see this drop, right? It seems like we're pretty close to the top of this, or somewhere close, because all the financial experts are saying that they have to break something at this point. These yields going up for the UK market broke the pension funds, right? It dropped the pound off of a cliff, the euro off of a cliff, the yen has completely blown up. So these yields pumping like this have had effects on countries and currencies already. The Federal Reserve can't really keep doing this for too long before it starts to break something. So now, if we're saying that the markets are controlled by the Fed, then we have to really listen to the Fed, right? And what the Fed has said for the first time in a very long period of time is they're thinking about starting to slow down the rate of increasing the rates, right? So then that's usually the first signal to say, hey, they're starting to think about not raising the rates as quickly. Does that mean that they're going to drop the rates? No, but that means that the narrative is starting to shift. Now, psychologically speaking, it's like complete deja vu to me, because I've been here, especially in the crypto markets. I've been here since 2012, and it's the same thing always. Everybody gets panicked. This entire room empties out. Okay, nobody wants to even hear the word crypto or assets or anything like that. Everybody starts screaming, "We're going into recession. The world is collapsing. We're all gonna die." And then in the background, the signals start to change. Right? You start to see, okay, well, but the Fed is saying that they're going to start slowing things down. And the response that every other government had when it came to their currencies collapsing and stuff is they started controlling bond prices, or they started doing something to actually control the system. And many of them actually, their response is going to be to print money and dump it into the markets. But the point is, right now, this seems like it's peaking. So could it be one of these where it's just kind of going sideways and it pumps a little bit more? Sure. But it's unlikely that this will keep going for much longer, because at some point they're going to break something in the financial system. The 10-year yield is a much better representation of, when we always talk about the financial markets are an ocean and the stock markets are a sea and crypto is a puddle. This is the direction that the ocean is going. Right now, the ocean is actually dumping, right? And this is also inverse relationship. When this goes up, crypto goes down. So let's just look at that for a second. It's hard to see. This is BTC, I think, yeah. So you notice when yields go down, crypto goes up. Right? Even back here in 2017, as yields were going down, crypto was going up. As yields started to go up, crypto started to dump. even all the way back to here. As the yields dumped, crypto pumped, and then as the yields pumped, crypto dumped. There's a bit of a delay in the process, but almost without fail, that's what happens. So even here, like, the yields dumped and crypto pumped a short while after, but as crypto was pumping, we were saying, hey, yields are pumping at the same time, which means there's a dump coming sometime soon, and that's exactly what happened. Yields went up, that took crypto all the way down, right? Now, that yield look like they're starting to turn around. Again, this is on the weekly, so it takes a long time for these charts to get printed. If this continues downwards, that doesn't mean crypto is going to turn around and just pump and run off on a run from here, because the way what's happened in crypto definitely means that it's going to take some time. It usually takes about 6 months for the human psyche to forget the trauma that just happened, and for the damage from all of these FTX collapse and stuff to fully play out. I think it's going to take some period of time. But in this process, when things are this cheap, yields dumping would be a great idea, or a great signal for this process to happen. Now, usually things don't just dump downwards, right? It'll kind of do this. It'll look like it's dumping, then it'll pump again, it'll create a double top. This was a nice fake out because it made a double top and then it pumped again. Now, another thing that I want to really highlight is we have never seen this kind of financial situation in the history of history ever. Like, even the financial experts, even the best experts in the world, the BlackRocks and the Blackstones, who made 60%, 60-40 bond and stock portfolios and hedged them so that there's when stocks drop, bonds don't drop as much, or bonds pump, and that keeps you back. No, all that stuff's done. It doesn't make sense anymore. Bonds fell 40%. Currencies fell 40%. Stocks fell 40%. The only thing that pumped is the dollar. We've never seen that happen before. That situation's never happened in history, and I think it's because they have complete algorithmic control of the financial market. So they can make whatever happen whenever they want to happen. So for us to predict exactly how things are going to go it doesn't even make sense anymore. The best financial experts are saying we've never seen this before. All we know is something's going to break. And when something breaks, the response that every single country has ever had in history is to pump money and dump it into the markets. So the very big, broad view, we can still have an understanding that history will repeat itself, but in the finer side of things, who knows? They're doing things we've never seen before. So this is the dollar. This has been the process of the dollar swallowing every other asset class whole, right? Between May of 2021 until now, crypto, stocks, bonds, euro, yen, pound, they've all lost 30, 40%, some of them 60, 70, 80, 90%. Crypto's down 90 something percent. The great thing I love about crypto is when crypto's down 90 something percent, we call it a discount. When stocks are down 70%, that means the company's dead, right? You have to take things with a grain of salt. When bonds are down 40%, that means there's World War III coming, right? There's different effects that these different asset classes have. So in this process, we got out somewhere around here. What was it? Right there. We came into the dollar at this point and just sat in the dollar. I'll admit I got in with a heavier amount of cash too early because I didn't predict that this was going to happen. But right around there is where we actually got back in. No, right around here is where we got back in with some cash, and then there's still cash sitting on the sidelines to deploy while the dollar's getting more valuable. But remember, when this process happens, you want to sit in the dollar for some period of time, and then now that the dollar's starting to peak out, now it's time to start deploying those dollars back into assets. Now, is this going to dump straight? Probably not, because that's usually not how things go. It's gone up, it'll dump, it'll probably pump again one more time, and then sometime in 2023 is when it'll most likely start to dump, when they start printing money and pumping into the markets. Now, a great signal that is a fantastic early signal is this. So this is the NASDAQ, okay? But instead of just looking at the NASDAQ, what you need to look at is the comparison of the NASDAQ and the breadth of the NASDAQ, okay? So the NASDAQ is the closest thing that we have to crypto when it comes to stocks, because it's tech stocks. Crypto is the next wave of tech stocks. Just looking at this, you would see, well, it's just been dumping the whole time, and now everybody's telling me that we're just going to fall off of a cliff and everything's going to zero and da 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 da. Well, in the background, when you look at, this is the breadth, okay? This is basically saying NASDAQ 100 stocks above the 200-day moving average. What is the breadth of the stocks that are participating in a rally, okay? This is a very keen indicator because the price action may be dumping, but the breadth is saying, you know, price action is making higher lows, or sorry, lower lows. So this low is lower than this low, which predicts that it's going to keep going down. Whereas this blue line, the breadth is making higher highs, which means there's more stocks participating in the rally than there were before. You know, on this dump downwards, it was less and less stocks participating on the way down. So this is usually when this happens, analysts call it bullish divergence, which means there's indicators starting to indicate that there's a turnaround happening while we can't see it in the price. Okay, so this indicator is saying things are going up. Okay, but the price is saying things are going down. That's usually a leading signal. Again, we're on the weekly, so this is a much longer timeline than most analysts even come and look at in the space. But this is what it looks like in history. Okay, during COVID, we went down to these levels where we are now. Actually, let me this here, like this level, this-ish level, let's say, right? When the breadth went down to here, COVID dumped, and the next thing that happened is we had a massive pump and all the assets pumped. Okay, this was 2018, same thing. Breadth dumped, and then the next thing that happened is things just went off on a massive run. And the moment the breadth returned, you know, let's say if you bought the top of the breadth here, you bought it here, between there and now is like, it was at 7,200 then, and now it's at, you know, even right now it's at 11,000. So there's massive returns to be made. This was the 2008 collapse. So this is also very interesting. If you can see, you know, the dump happened, breadth dumped. The price was dumping downwards, but you could see that the breadth had turned around. See how it's making higher highs and higher lows? It gave you a very early signal. This was, you know, in September. What is this? September of 08? Yeah. It was giving you a signal that things are starting to turn. Well, I guess you wouldn't know the signal until here. But even then, like December, it was already giving you a signal that things are starting to turn around while everybody was screaming, yeah, we're going to die, world's going to end, blah, blah, blah. Right? So do I think that now, after whatever, 9 months of us dumping and everybody getting prepared for a recession, now the recession will happen? No. This is just how it goes. Things pull back, everything looks scary, everybody predicts that this is going to happen, and then it doesn't happen. Same thing that happened during COVID and all these other things. But the good thing is, signals are starting to come out that there's a turnaround happening. Now, another one of my favorites that I look at is market cipher. Right? So, for those who are not familiar with it, the way we look at market cipher is when you see the momentum, the negative momentum. So this is, you know, positive is up, negative is down. When you see the negative momentum growing and it keeps growing, that means it's likely that things will keep dumping, right? When you start to see that negative momentum diminishing over time, and you can see this kind of curve, it peaked around here, and market cipher actually even gave buy signals here to say that looks like a bottom. You can see now the momentum is actually smaller than the momentum here, right? That's also a good sign, and that's basically what the breadth is picking up, although they're picking it up from different data, that, you know, the negative momentum is starting to diminish, whereas the negative momentum in crypto overall is at its peak. So let's go look at that, okay? Let's turn the breadth off. So this is crypto, okay? We had the most amount of negative momentum back here during the Luna collapse, or right after the Luna collapse, right? Now, even though FTX seems like it's scarier, we haven't seen that same process play out. The negative momentum is lower, or negative momentum is less than it was before, right? Is money flowing out? Yeah, money's still flowing out. There's actually more money flowing out now. So the money flow is this red wave. This green is money flowing in, red is money flowing out. There's more money flowing out of the market right now, yes. There's actually more people selling and running for the hills. But when it comes to how much total momentum there is, that's actually diminished quite a bit, right? Now, another thing, interesting thing to look at is Yeah, you're right. I can't even see this. I think it's this one. Yes. Okay. Another interesting thing to look at is this mean reversion channel. It's really powerful in being able to show, are things undervalued or are things overvalued? If in simple terms, when you see assets pop out of the mean reversion channel, that means they got way too overvalued way too quickly, right? Then you see it corrected back to still high value, overvalued, but not like insanely overvalued, and then it stayed in this overvalued zone for some period of time. Now we've seen it dump to the other side. This is the mean, right? This is the central mean value, the average value, let's call it, but it's actually the mean value. Now that we're getting to the point where things are undervalued, this is the entire crypto market. It looks undervalued. Okay, now let's go look at Bitcoin. Yeah, so Bitcoin is significantly undervalued right now for how much value it actually provides to the markets, or at least not even to the markets, but the average of the value that it provides to the markets, right? And at the same time, you can see that momentum is starting to diminish. So negative momentum is starting to diminish. Is this going to stop tomorrow? No. There's still some big dominoes to fall that are coming up front. And this isn't, a one-to-one. Sometimes this kind of stuff happens where there's negative momentum, it gets bigger, then it looks like it's getting smaller, and then you just have one giant wave of negative momentum. That could definitely happen. So it's not time to start diving into the water yet. But are things undervalued? Yes. Is ETH undervalued? Yes. Especially Ethereum. It has thousands and thousands of apps that are very useful running on it. We're seeing so many tokenization projects and so many other things being built in the background for it. And yet it's still considered super undervalued. This is XRP. XRP's mean reversion channel never even looks normal because it just does this, right? It just doesn't follow normal rules where, it's kind of just in that channel for a long period of time, pops out a bit, and then just does nothing for a period of time, and then just, within whatever, how many days is this? Is this 21 days? Anyways, it doesn't follow any of the normal rules of how this process should work out. But even it looks like it's super undervalued at these prices, although it's gone to $3.80 before. Matic, same thing. There's so much development happening on this project, and it's at the place that it is right now. Link is also not really following the MRC. I guess there's not enough data for Link to actually follow that. But you can see Link had a bunch of positive momentum at the beginning, well ahead of everyone else, and then after that it's just been negative momentum for a period of time. So all that put together is basically saying that there's been a lot of hemorrhaging in this market, but it looks like that's coming to an end. And when we look at the whale numbers, or what's the smart money doing? The whale started to actually accumulate from, what is this? Yeah, from basically March of 2022 now until now. The whales with 10,000 addresses has gone up from 85 to 121. So the whales, this purple line, or I guess it's purple, that's the biggest players in the game. They've been trending up the whole time. At the same time, the 0.1 addresses have been going up ever since, technically same thing, February, March of 2029, they started accumulating, and everybody's just been accumulating from that point. The only ones that are dumping now are, it looks like 1,000 to 10,000 addresses. Not even 1,000, 10,000, just over 1,000 Bitcoin addresses. That's gone down from 2247 to 2,000 something. So, I mean, this also looks like consolidation, where those smaller addresses are just consolidating into bigger wallet addresses. But the point is, most of these lines are to the right and up, which means most of them are actually accumulating, while we in crypto are scared and running for the hills. So that's why I accumulated some here, right there, with the whales. Now that they're down, we're going to accumulate some down here, so our average price will come out to be somewhere right there, which is not a bad move. So this is what we're looking at. Now, especially in the last 6 months after this dump, we've seen all the smaller addresses started to go up. Now, a lot of people are saying this is shrimp or this is like, the little guys buying. No, this is, first of all, normal data doesn't look like this. This is unsmoothed data, okay? There's no averages applied to it, which means this is effectively algorithmic trading. This is algorithms that are buying it, and the bigger players have woken up to, we've said this for a long time, but the bigger players have algorithms running that have 0.1 Bitcoin, 0.01 Bitcoin that are accumulating in the background, and then they consolidate down. And since we don't have that $10,000 plan anymore, they've hidden a lot of this data from here. Yeah, Glassnode has become basically useless since we've lost access to that plan. And I'm not going to spend $10,000 again to go buy that plan again. I'll put 10,000 into the market. When you're looking at the fear and greed, we're still not as low as we've been before, right? Even in 2021, when the dump happened, we went significantly lower. We've been kind of in this higher range for some period of time. During Luna times, we were down there for a bit, but I think we could definitely go a bit lower. So, in simple terms, the broader markets are saying that we're starting to turn around. Well, in the broadest part of it, the biggest players are looking forward 3 to 5 years, or not even 3 to 5, like 2 to 4 years, and saying, guess what? All things aside, next generation of markets is tokenization. Like, when they say next generation of markets, they literally mean stocks, bonds, real estate, alternative assets like land, wine, art, every single thing that you call an asset will be visible on the public ledger. Like, how much more proof do you need that they're going to, and these people own the world. When they said ESG happened. So they're going to transition everything towards that world. That's the very zoomed out view. The markets themselves, the owners of the markets, the Federal Reserve and the central banks, they're now starting to discuss the option of turning, which means 3 to 6 months down the road, there's going to be a shift in narrative. The bond markets themselves are now signaling that things are starting to peak out in some capacity. They could have another little pump, but they can't just keep going like this or they're most likely going to break something, and that's going to be an excuse to do this, but they're pretty close to breaking something in that whole process. So the bond market is starting to signal the Fed's words being true. The dollar has peaked out, which also is another signal saying, okay, things look like they're going to start to turn around. When the dollar dumps, that's when all the other assets pump. The NASDAQ has a signal saying that, the breadth is telling us that things are starting to return. The momentum is telling us that things are likely to return in some capacity. The on-chain is telling us things are likely to return in some capacity within the next few months. So all these are signals to start to say, get your ducks in a row. Get cash ready. Start to actually direct it towards assets, sitting on cash. Especially if you're somebody who's been sitting on euros or pounds, thinking that was safe, you lost 30%. Actually 40% on pounds, 30% on euros, right? Now, hopefully you can understand that there is no safety net. If you're somebody who's been sitting on dollars thinking that it's fantastic, good move, but now it's time to actually move out of dollars and go into assets with some reasoned planning. If you're somebody who's been scared of crypto recently, just know that this is the time to actually start to get into crypto in a significant way with a 3-year timeline, with the 3-year time horizon looking forward. And yeah, now, and just an XRP update, because I've been following this and been so excited about this for so long. They have completely won the lawsuit. They won everything without a question of a doubt. They have filed the final briefs for settlement. It's not even for settlement, for the summary judgment, which means both sides have filed the legal paperwork to say this is what we want the judgment to be. The SEC has lost every single argument that they've had. Now, there's 2 options. There could be a settlement at any time, or the SEC could push it all the way out, and the judge has to make a summary judgment statement, effectively, that the latest it could be is March 23rd of 2022, if everything got pushed out as far as they could. Okay? So between now and then, I'm expecting an explosion for XRP. Again, it depends on your own strategy, but if you're somebody who's holding XRP, what's most likely to happen, again, I'm not Nostradamus, but what has happened in history and what's most likely to happen is we're not going to get any news of the lawsuit ending. It is just going to explode on its own without us noticing anything. The moment that happens, we assume that the lawsuit has ended. It's just been announced to the bigger players first because they always get the news first, and we haven't heard about it. It's going to happen out of the blue because XRP does this. It does this. Last time it was 4 weeks for it to go from 20 cents to $3.60, $3.80 at some places. It's just going to shoot off to the moon, okay, likely. When it does that, start to take profits. Have a clear profit-taking strategy in place. If we've done the work together, you should have a profit-taking strategy already. Refresh on that. And then ideally, the first thing you do is when it pumps a decent bit, you take out your initial money, right? Again, not telling you what to do, but that's what I would do. Take out your initial money and then just start taking profits along the way. Because when the news gets released that it is official that the lawsuit has ended, that's when you need to dump. Right? Because what people do is when the news gets released, you think, oh, the news is out. That means people are going to buy it. Yes, the average person is going to buy it. The smart money is going to dump it on them. So by that time, you go in and set your trend-based stop losses, and then also just start taking large chunks out of the market. Because what happens is this, right? It pumps, and within 2 weeks, it dumped back. And within another 4 weeks, it was back down to basically where it started, or really close to where it started. So it might even be a shorter timeline than that. Now, the flip side of it, just to not be fully bullish on it, the flip side of it is that this case could be pushed to the Supreme Court. That could be the next step. But what's most likely to happen in this situation is the news will pump it. The lawsuit has ended. They've won the lawsuit. People will FOMO in, buy it, thinking, oh my God, now this is going to be the greatest thing ever. I need to hold it long term, hodl. And then they go, oh, but then, the next step is it's going to the Supreme Court. So the point is to make an exit on it. When it pumps, exit. Take all of the money out in stages or, however the actual strategy is. The point is not to just sit in it thinking it's going to be the future. That's never the point of anything. The point is once it pumps, get your initial investment out. As it pumps more, take more and more money out. At some point, liquidate all of it. Then it'll crash back down. Then if it goes to the Supreme Court, great. It dumps down again and we get it for pennies on the dollar again. So it's been a long wait. And I will be very excited when the patient and persistent strategy pays off compared to the lunatics who were getting so rich while we were sitting on basically nothing with XRP. Okay, so I'm not going to talk too much more. All this is signaling towards sometime for Q1 of 2023, us having a lot more data and clarity around when things are going to shift. And within the first 2 quarters of 2023, it seems like the entire narrative is going to shift. And we're 18 months away from the next halving, which is when the whole crypto market's supposed to pump. And because everybody knows that date, it's really likely that the smart money is going to front run it and actually pump it well before that timeline. All of that lines up perfectly with, Real Earth Elements launching and raising money during that pump process, Private Harvest O and all our other projects doing the same thing in a similar environment, and somewhere along the way, XRP doing its thing. Question.
Would you buy XRP now at these levels, or would you expect it to come down? There would be a better buying opportunity in the near term.
It'll probably go down. But that's the thing, right now, did that come through?
Do you think it's a good time to buy XRP now, or do you expect it to come down lower in the near to midterm before the announcement?
My thing is, in the art of not being greedy, it's at a 90% discount from 2017 today. It went to $3.80, it's at 38 cents now, right? I'm happy to take my 90% discount and not be too greedy, but not buy all of it. Because the thing with the settlement is, it's probably, if we know the date is March 23rd, then it's not going to happen on March 23rd. They're going to fake people out, and the settlement could happen at any time. So me personally, I'm happy to buy at these prices and then buy again when it goes lower. and then buy again, and buy again, buy again, right? So dollar cost averaging is always the safest decision to take. But do I buy at these prices? Yeah. Do I think it's more valuable than it was in 2017? Yes. Like by an order of magnitude at least, maybe multiple orders of magnitude. When you're thinking about the value of things, at 38 cents, yes, I would buy it.
And
Start buying it at least. Yeah.
if you listen to like, people in the market talking about the market now, many people expect Bitcoin to go lower to below around 10,000.
Yep.
So, do you believe that too? Like, would it make sense to start to accumulate at these levels? Or do you think that these market participants are correct that we will see Bitcoin at 10,000?
So let's look at history, because history always gives us a lot of good lessons, right? Do we need to, like, when the bear market actually happens, the reason I'm saying for XRP is because XRP has a lawsuit. It's a very special case. Let's think about all the other cryptos, right? When the bear market happens, it happens for a long period of time. And people thought this was the bottom back in 2017 or 2018, and then they thought this was the bottom, and then thought this was the bottom, and then they thought this was the bottom. You don't know when the bottom is, right? Do I think it could go that low? Yeah, I think it could go even lower. If Tether explodes, we're going to $4,000 or $5,000 Bitcoin. Do I think Tether is going to explode this time? No, not really. I think Tether is a grenade that they'll keep in there and explode around 2024 because they don't like to let a good crisis go to waste. When the market dumps down to a level where there's maximum fear and despair and desperation and all those things that we talk about, it stays there for a long period of time, right? It's not like it just doesn't give us an opportunity. So is it a better idea to just be patient and see what happens? Or is it a better idea to be like, well, we start accumulating early because we don't know if it's going to go down that low, right? For me, I've learned now, especially in the environment that we're in, we have no idea what they're going to do. Anything could happen. Could it go to zero? No, but I'm not discounting the idea completely, right? When the bear market, whatever happens, after that happening, we're going to have an extended period of time for us to accumulate. Simply because the smart money has trillions of dollars to accumulate. They have hundreds of billions of dollars at least to accumulate in these markets. They can't do that without raising the price unless they have a long period of time to do that process. So I would just wait. I would give it time, and because at the same time as this happening, they're breaking the real financial system. So we don't even know what kind of nuke they're gonna drop in the ocean to worry about the puddle, right? And the puddle itself has now toxic shit going on inside of it. So just let it happen. Let it blow up. Let other people take the risk. It's okay. If it goes lower, great. If it doesn't go lower, great. It's fine. I was happy to accumulate at 30,000. 30,000 is a really good price. If it's at 70,000 and then you come down to 30,000, you start from 30,000 and accumulate down to whatever 3,000 that it goes to or 5,000 or whatever, your average price comes out to be like 15,000. Looking back, people wish they got it at 15,000 this cycle. Do I think that's not going to happen going forward? No. That's why I'm not trying to always maximize returns. I'm just trying to minimize risk. And with a long enough timeline, that process can happen. But for now, yes, it is possible that it will go lower than $10,000, especially with all the contagion and stuff that's happening right now. Regardless of if it happens or not, I'm just being patient, sitting on the sidelines with it.
And you haven't mentioned gold. Do you have any view on, because now we see the dollar weakening a bit, we will still see some interest rate hikes going forward, but as you say, we may be closer to the end of the interest rate hikes. So when that stops, and we will see more of the effects of the recession hitting the market, will the price of gold?
No. I don't think gold's going anywhere. Like, gold has basically done absolutely nothing since 2011, right? The problem is we're in a new financial paradigm where the financial markets do not work the way they used to work. Like, logically thinking, yes, gold is a great hedge against this kind of environment. Therefore, gold should be the thing that we should buy. People should buy. So the price of gold should pump. The world we're living in, first of all, this chart is not even gold. This is CFDs on gold. What the hell is a CFD? It's actually just fake paper contracts on gold. So the price of gold is not the price of gold. The price of gold is fake paper contracts on gold. So the financial markets, they can just make up a bunch of, like, there's literally, I think, I forgot the number, but there's an order of magnitude more paper contracts to own gold. There's people walking around with papers that they say they own gold than the entire gold supply of the world. So gold is no longer, the price of gold is no longer determined by anything to do with how much gold there is or how much demand there is or anything. It's completely 100% controlled to the point where, like, Goldman Sachs and all these guys have been, they've been fined. They get fined regularly, actually, for manipulation of metals markets, right? At the same time, there's algorithmic control of the entire financial market. So they can make whatever, do whatever, whenever they want. And now they've done it with euros and stuff. They've done it with gold now. Since 2011 until now, when they took algorithmic control of the markets, gold has made you $0.
But
right?
there are people talking about that we will maybe return to a gold standard.
How old are those people?
You see that many central banks and the BRIC countries
We're not going to a gold standard.
are buying a lot of gold.
They're buying gold, but they're not going to a gold standard. Why would a central bank who loves to print money and pump it into the system put handcuffs on themselves again to go back to a gold system? I'll give you the new system. It's an asset-backed system. And it's already live, okay? It's called XRP as a asset-backed digital, a physical asset-backed digital asset, right? I was privy to a conversation, and I'm not going to say what I should say because it's a private conversation. All I can tell you is the future of the asset-backed currency system is going to be backed by a digital asset, namely XRP, because XRP is built to be backed by the assets of a country, right? It is not going to be backed by gold at all.
But is that going to be supported by all countries? Because, like, the BRIC countries, they really want to get off the dependence on the dollar.
Exactly. Yeah, so then you go to dependence on XRP, which is a completely neutral bridge asset. Right? As a matter of fact, your CBDC can speak to the XRP ledger in a private manner, and then it can speak to the dollar on the other side. It can convert to the dollar in 3 seconds, and you can have business with the US without ever having to rely on the dollar. It's a neutral bridge asset that no country owns. It's supranational. It's fair to all countries. Russia is using XRP. All the BRICS countries are using XRP. Everybody except for, like, Iran and North Korea are using XRP already as we speak. The central banks have already created demo CBDCs on XRP. And just when you look at the coding of the financial system, right? It's all about the coding. When you look at the coding of the financial system and the structure of the financial system, which they do not want to let go, but they want to bring in all of these benefits and stuff, it's guaranteed. Now it's guaranteed. A few years ago, I was still figuring it out, but now it's 100% guaranteed that XRP, with a slight combination with XLM for, like, certain use cases and stuff, is going to be the future of global currency backing. What that allows them to do is then still mess with which assets are backing, because there's currencies that have gold, countries that have gold, there's countries that don't have gold. So the conversation I was privy to was about how a currency is being backed by the assets of a country. And I was like, and these are relevant parties capable of executing such a thing. Not capable. The conversation was that it was executed actually the day the conversation was happening. Okay? And And I was like, what do you mean the currency being backed by a country? And the answer was, yeah, because countries have assets, countries have sovereign wealth funds, they have mines, they have land, they have natural resources, and pretty soon nature is being turned into an asset. They're like, we take those and we back the currency of a country with those. So it's a basket of the wealth of a nation. So I was like, well, that makes perfect sense. You just take every single country and you back their wealth with how much wealth they actually have, which is actually a really stable way of generating currency. But it gives the country or the central bank the flexibility to be like, oh, guess what? Our real estate is now valued at XYZ more because some real estate, whatever, appraiser said it's worth more now. So they can still play with the system itself. But there's absolutely no way it's going to be backed by gold, right? The gold is not for us. The gold is not to be accessible to any of us. The gold is for the central banks themselves. The gold is like Russia had a bunch of gold. The moment they couldn't transact in dollars, the first thing they did is they started transacting in gold. Gold they know anybody will accept. Countries are keeping gold as like a world melting, World War III hedge, right? For people as an investment vehicle or wealth protection vehicle. I mean, no, it doesn't even make sense. It literally doesn't make sense, because from 2011 until now, if it made you the same amount of dollars, that means you lost a bunch of money, right? It doesn't even protect wealth anymore. And at the same time, Bitcoin is eating gold's lunch. The entire tradable physical market of gold, not even tradable. The entire physical quantity of gold is worth about $4 trillion. Crypto was at $3 trillion. And it still hasn't even started. Apple's was at $2.3 trillion. So gold is tiny as a financial instrument. Is tiny, and there's a new digital asset financial instrument that people are way more interested in. That's way more liquid. Bitcoin services all the functionalities of gold better than gold. And then I know there's people who are going to be like, no, but when the internet shuts down, I'll have gold so I can go buy some food. Listen, when the internet shuts down, if you have gold and you're walking around with gold, you're going to be the first person to die. So there's literally no functionality that I can think of that gold gives me better than these other things. A farm gives me better security than gold in those kind of situations, right? So like, I'm more interested in useful metals, right? Metals where there is a demand. There aren't massive paper markets. Like nickel is huge. Rhodium, we had the rhodium conversation, would be huge. But I don't see a use case for gold. There's actually a lot of financial experts who they can mentally take the collapse. They're like, yeah, system's gonna collapse. Yep, every time it collapses. Yep. You always need to build a currency that's backed by assets. Yep. And the only thing they can think of in the world that can back a currency is gold, because that's what's been done in history. But when you start to think, well, we're backing an asset, a digital asset, with mines, farms, commodity supply chains, real estate, companies, brands, communities. The world we're transitioning into doesn't make sense to those older people. And they don't understand the world that they're transitioning into, because the world they're transitioning into is not the physical world. This physical world is going to be such a small piece of the total amount of value that's going to be created in the future. Like a PwC report just came out, and it said AI is going to add $15 trillion of GDP by 2030. Just AI by itself. So when you combine AI and blockchain and metaverse and the multitude of digital things that are going to come out in the completely new digital universe, for that world to be run on stuff that's based on backwards looking things doesn't make sense. It's going to take the real world's assets and turn it into a digital representation. All right, has that been on me the whole time? Thank God. Hi. So yeah, we're gonna start doing this. We're like, I think on a weekly basis, do a market analysis and just keep everybody updated on stuff, because now it's action time. Between now and the next few months, there's gonna be data coming in that's gonna clarify what we should do, and having these conversations is actually something very, very useful. Now, another good piece of news is not a single token that we picked has melted down, or their use case has changed, or the company's gone bankrupt, or they lost their money in FTX or some crap like that, right? That also That's why we do our due diligence the way that we do it, and that's why we pick the ones that we pick, because they're functional, real-world use cases, and not a single one has had any kind of a collapse or, you know, lost people's money or ran away or got scammed or anything like that. But that's it. So we're going to close it on that. Any further questions? Yes.
What do you think? What will happen with Solana? Because
Really good question. Yeah. So the question is, what do we think is going to happen with Solana? I think Solana is going to be one of the base layers of running the entire world in the future.
but now it's because
Yeah.
FT.
Exactly, right? So what we have to understand is, like, there's a lot of misdirection in this space, right? So on one side, Solana is on every single elite checklist you could put it on to say the World Economic Forum, when you look at the teams, you look at the bank, the supporters, everything, it's being run by people who are the who's who are going to make the world happen. On the other side, they create, they like, you know, so sometimes they pause the blockchain to be like, we can pause it, we can control it, which is a huge thing for them that they'd really need. Now they put FTX on it, got everybody onto it, blew it up, and now you lose faith in it, right? To me, this is misdirection. This is to convince you that Solana sucks, so you don't buy Solana. Same way that they convince you XRP sucks, and XLM sucks, and Algorand sucks, and all the coins that are actually going to be running the future of the world, they figure out a reason to convince you, don't buy this one. This one sucks. You know what doesn't suck? Luna. Luna's making people rich. You should go buy Luna. Dog ear coins are making people rich. You should buy dog ear coins. You know? So it's like it's psychological training to scare us into certain corners, right? And I think Solana is one of them. When you look at the technology of Solana, when you look at how it fits into the bigger plan and who's running it, I think it's one of the ones that's going to be there for the next 200 years.
So to buy now.
You know I never say that. Yeah, there's only one coin that I would make that comment about, but like, if I had to answer that question, no, don't buy it now, because the thing with Solana is it just had a big collapse, right? And that will usually lead to more collapses in the ecosystem. So let those collapses happen fully. Almost every single time I've made a decision in the market, I've realized I should have been more patient. I should have just held off even longer and sat back even longer. Even just by a little bit, just being a little bit more patient would have been better. So right now, yes, we start to feel like we should buy it. Solana's at a good price right now, but it definitely, like, let's even just quickly look at Solana. Let's run this analysis. Oh yeah, how do we switch it from here? Cool. Okay, Solana. Yeah, according to this data, it's getting pretty close to being undervalued. But isn't that interesting? Like, in this whole collapse, you know, when Luna collapsed, Solana went from 134 down to $30. When FTX collapses, it just goes from, what is this, $33 down to like $15. Okay, that's a 50% collapse, yeah. You know, but overall, it doesn't look as catastrophic when you actually see it like this. When you see it like this, you're like, oh my God, this is like a huge drop. This just looks significant. Wait a minute. No, FTX, no, it collapsed. This data, this is not. That's why I was like, this doesn't look right. This is only out until whatever, 11th of November. Something is wrong. Sold USDT balance. There we go. Okay, so then it dumped from 38 down to like 12. Okay, that's much more significant. So according to this, it's saying it's super undervalued as we speak, the mean reversion channel. right? And we've seen the negative momentum starting to die down. You know, like, if you can say something is for sure valuable, which is difficult, but you know, you can still pick a good one. I always just go from like, where is it now compared to where was it? Because in crypto, things always go, the good ones always go way, way beyond where they were before. It was at $263 and now it's down to $14. Is that a good discount? That is a fantastic discount, right? Exactly. Which I think so, but don't take my word for it. That's just my analysis of like, you know, Elite approved all this stuff. Like, there's so many other opportunities in this space which don't have this risk, so I would not take this risk at this point. Right? We got everybody out of Solana back here. We got out of Solana like right here, somewhere around there. Just because at that point the blockchain got paused for some period of time, and then that was too big of a risk to take. But do I think it's going to survive? I think it's going to survive. It's almost certainly going to survive. The great thing is like this process, right, should go on for a long period of time, especially now that people get scared of it. So it's not like we'll miss the train, right? Like, let's give it until sometime in 2023 and then see if it survives, see if the narratives change, see if the deployment's still happening, and then go from there. Right?